the concentration of investment in AI in equity markets is such that it's now a single point of failure. Um, and if equity markets go bust, that's pretty bad for the economy at large.
Hello, I'm Fergus Macphee, and welcome to the Tech Report on Times Radio. Joining me today is Alex Hern, AI writer at The Economist. Alex, thank you so much for coming back on the show.
Thank you for having me.
Now, we're going to start. Now, despite your employer, neither of us are actually economists, but we are going to start today's episode of the Tech Report talking about the Bank of England, because the Bank of England, no less, have raised concerns yesterday about AI and warned that any bubble in its valuation would risk a sudden market correction, which could pose a material danger to Britain's economy. The IMF also agree with that sentiment. Are you surprised by that intervention?
No, I mean it's on the face of it, it's just completely true. The big question is whether there is a sharp correction, not so much whether or not a sharp correction would have a material impact on the British economy, because we're talking about some of the largest companies that have ever existed, the largest companies that have ever existed, that have ever been publicly traded based on market cap. And the issue that the AI sector is posing is that there are a lot of companies that are not particularly diversified at this point. Nvidia is the obvious example, right? This is a multi-trillion-dollar company whose revenues and valuation are not entirely, but kind of overwhelmingly based on a forecast for an AI sector that is many, many times larger than it is today. If that forecast becomes, untrue, or even is just seen as a bit over optimistic, there's the chance of a downward correction in just Nvidia's share price alone, right, which would wipe perhaps $1 trillion off the market cap of one of the world's largest companies. That's the sort of thing that starts having knock-on effects. Every single person who has any pension wealth invested in an American tracker fund, which is many, many people in the UK, right? Our UK pension funds, as Rachel Reeves is upset about, are not substantially invested in the UK. Lots and lots of people will see real wealth wiped off. That could lead to a chilling effect on consumer confidence. That could lead to a generalized downturn. And that's not even taking account of the fact that there are well-publicized circular investments across the whole AI industry. NVIDIA has an investment in CoreWeave, who buy chips from NVIDIA. OpenAI buying chips from AMD in exchange for a 10% stake in the company. Microsoft having its own investments in OpenAI. It's a very incestuous market right now. And so that means it's unlikely that any downturn would be limited to one or two companies. If Nvidia stumbles, the whole AI sector takes a turn.
Yeah, so I'm talking in theoretical terms here, but obviously we all remember the crash in 2008, and I believe that stemmed from the US housing market, right? Obviously, so is it the case if something crashed here in the AI market, perhaps then that could have a knock-on effect to other sectors?
Exactly. I think the one saving grace here, there's two reasons for optimism, even if we take a crash as a given, which, it might not be. The third reason for optimism is maybe the AI bubble is actually an AI boom and we'll just float off into utopia. But if we assume that a correction is coming, the two reasons for optimism, one is that, as Jeff Bezos put it earlier this week, this is an industrial bubble, not a financial bubble. And the difference there is that stuff is being made. A financial bubble is purely paper wealth, right? It's values go up and they go down, and at the end of it, you look at what's happened and nothing. People thought they were rich, they weren't. The paper wealth was fake, it all went away. The AI bubble, stuff is being built, both physical infrastructure, data centers, graphics cards. That stuff will depreciate, but it doesn't go away if the bubble pops. It's still there, and we, hope that it can be repurposed into other useful things. And also intellectual infrastructure. The AI models that are being built that are having, massive impacts on the economy at large, they don't get deleted if OpenAI goes bust. They're still there. They can still provide use. They were overvalued, but they're not useless. Um, The hope here is that we're comparing it to the railway bubble, right? Railway companies went bust in huge numbers over the 19th and early 20th century, and we still have a railway network. It still massively impacted the fortunes of nations all around the world. So that's reason one for optimism. Reason two, when you compare it to the global financial crisis, is that the worst financial crises come when something that people thought was safe becomes valueless. The housing bubble in America collapsing was bad, but what was really bad was the impact of these things called collateralized debt obligations, CDOs, which became a three-letter acronym that everyone knew at the time. Because what had happened was American banks had taken all of the mortgages owned across the economy and sliced them up into tranches and said some of these tranches are triple A. We've taken lots of bad American mortgages, but by bundling them together and assuming that only 1 in 10 of them will fail, we've created a debt instrument which is itself safe. And that was also wrong. It turns out that if one house goes bust, more houses are likely to go bust. There is an internal correlation. And that was what caused the problem because people thought that these CDOs were safe. They put money in them that they couldn't afford to lose. Banks did the same. Lehman Brothers goes bust. Counterparties fail. So anyone who's got a contract with Lehman Brothers suddenly finds that that's not kept up. And that's what caused the real problem. The hope with the AI boom is that it's not seen as a safe investment. It's everyone buying Nvidia stock knows that they are betting on volatility, knows that it could go up rather than down. They're not buying an amount of Nvidia stock that means that they're unable to fund the mortgages that they've also underwritten, right? The worry is that, actually someone is, that someone is betting the house on this.
Well, okay, so the words the Bank of England used, I'm just going to read a little sentence from them. They were talking about equity markets, and they said they could be particularly exposed should expectations around the impact of AI become less optimistic. So that should doing a lot of work there. The bank are not saying this is going to happen. They're just saying, guys, we're putting this on the radar.
Right, exactly. The bank's job is not to forecast whether or not AI is a good investment. The bank's job is to say, hey,
Okay, the $1 million question then: should everyday people be concerned about this?
um, concerned, possibly. I mean, if you have a pension, which most people do, thank you to auto enrollment, then there is a chance that your pension will shortly go down by the amount that is invested in global equity markets. I think whether or not you should do anything about this is the bigger question. Most people should not be trading individual stocks anyway. If you have massive exposure to Nvidia on a personal basis, I hope you know what you're doing. Most people who are shortly going to retire probably shouldn't have much of their pension wealth in equity markets at all. And most people my age probably don't need to be trying to time the market to such an extent that they should be, reaching into their savings, selling equities, buying bonds, waiting for the just ride it out. If you're in your 30s, you'll survive this.
I just want to go back to something else you said because I have quite a few people in my personal life sort of ask me this. They say they see the phrase AI bubble and they ask me about it, and I sort of try to explain it, and they sort of say, "Oh, so AI could just completely go away then?" And I sort of say to them, "No, no, no. I'm pretty sure it's here to stay. It might just not be as valuable as people think." Is that the right thing? Is that the right way to explain it?
I think so, yes. I mean, one of the fundamental points of calling AI a bubble is to flag that the technology and the fortunes of the companies that make it may be unrelated. Just a really good example of that was the arrival on the scene of DeepSeek in January this year, which was a Chinese company that demonstrated that it could build uh, OpenAI quality models 3 months after OpenAI built them for a fraction of the cost. That that's the technological progress, right? That's an impressive feat of engineering. That's something that bodes well for the future of AI as a technology, just bodes very poorly for the future of OpenAI as a profit-making endeavor. And so one of the many ways that the AI bust could come is if it just becomes clear that as a technology, the value created by AI does not accrue to AI companies, that they are stuck building products that are instantly commoditized, that they're unable to sell for more than cost. And so, although they create huge value across the economy, they don't get to charge for that, which is, to be fair, sort of the story of the telecoms bubble. In the early days of the internet, it looked like, there was going to be vast amounts more data flowing over fiber optic cables globally. And so the telecoms industry invested huge quantities of money laying cable across Europe and America. And what happened in the end is it turned out those predictions were right. There were huge amounts of data flowing. It's just the telecoms industry had no pricing power. The second anyone raised their price, you would just switch to a cheaper ISP, and they created huge amounts of value across the economy and went bust in the process.
And when that happened, this is what always people compare this to. I mean, was that something that sort of felt like it was overnight, or was it a kind of a gradual bubble bursting?
I think all bubbles that burst tend to have a bit of both, right? You have a 1 day big shock as, the inciting incident happens. And then the actual bubble bursting is the slow deflation after that. The first day almost always gets followed by a bump, right? If you're looking at equity markets, it's rare that you get just a bubble bursting that is 8 straight weeks of stock prices declining. It tends to be a short, sharp shock. And then people are optimistic. Maybe it won't happen. And then just each day is a little drip. The ups aren't very big and the downs are. And you look back 6 months later and it's been very bad news. That's what a real bubble bursting looks like, the sort that we haven't had since 2008.
Okay, we've talked a little bit about the circular nature of some of the companies. So let's move on to NVIDIA is investing $2 billion into Elon Musk's XAI. And NVIDIA CEO Jensen Huang yesterday said that he wants to be part of almost everything Elon is involved in. We seem to see this a lot in the AI sphere, as we've just talked about. But is it normal, in other words, for business and tech to be almost this incestuous, I guess?
It's not normal, certainly. This is, I think, an outcome of some of the interesting dynamics in the AI world. There's kind of two stories you can tell here, right? The conspiratorial one is that lots and lots of companies need to create the impression of continued growth in valuation, continued interest, continued financial success. The revenues aren't coming in at the bottom of the market. And so instead, they are creating artificial perceptions of growth. They're investing in each other. They're signing deals to access chips that don't actually require money to change hands. And, the hope is that this is keeping the game going, keeping the sense of progress going, and the revenues will come down the line and the confidence trick will have paid off. That's the conspiratorial one. I think the more optimistic's not quite the right word, but the fairer minded one is that what we have here is a market where everyone in it thinks they're going to change the world, and everyone in it thinks they're going to create a huge amount of value, but they don't know where on the chain that value is going to be accrued. So they are all trying to become exposed to every layer of the chain. Currently, the feeling in the markets is that Nvidia, because it sells these chips that are like the shovels and picks of the gold rush, is really well placed to capture a lot of that value, but that the model makers, companies like OpenAI, and the application layers, companies like Cursor and Microsoft, maybe are less well placed to capture the value because all of the money they take in has to flow straight out the other side to NVIDIA. And so that means NVIDIA is worth a lot, and OpenAI kind of, its valuation isn't rising as quickly. But if you're NVIDIA, you don't want to have your entire company plummet to zero if it turns out that chip making isn't where the value gets captured. So you divert, you diversify your portfolio. You take stakes in the people above you in the chain and the people below you in the chain, and you try and make sure that if everyone's wrong and you're commoditized, you're okay because you've got stakes everywhere else. You are now a big, well diversified bet on AI in general. That definitely describes some of the dynamic here, right? That's why we're seeing this vertical integration. You also then get the sort of more standard in capitalism thing of companies trying to ensure that their suppliers supply to them on favorable terms and that their customers come to them on favorable terms because they own a little chunk of each of them. And at the margin, you end up with competition issues there, but everyone's treading very lightly around the American FTC and the UK CMA and the EU's Competition Commission. So, we're getting softly steps towards that sort of outcome.
So in this current chain that we've got, who needs who more?
I mean, if we knew that, then we'd be able to bet on the value, right? Right now, in the state of play in late 2025, everyone needs NVIDIA because NVIDIA produces the raw material that you use to create AI and that you use to run AI. And so everyone has to play nice with the company. It has the power to create winners and losers, and it uses that power. NVIDIA is very clearly one of the reasons why they have such a cozy relationship with CoreWeave, this company that basically exists to buy chips from NVIDIA and rent them out to other companies, including NVIDIA, who pays a fee to CoreWeave to use the chips that it sold it. One of the reasons why it does that is because it really, really wants a company that isn't OpenAI, Anthropic, or
Yeah.
Google to be providing GPUs to other companies because NVIDIA really wants more players to be buying chips from it because it's scared of this idea that it may lose power to a small cluster of concentrated model makers. Model makers have their own thoughts. They look at NVIDIA and they go, well, you hold the power now. So we're desperately going to try and incentivize the production of other chips. This is why OpenAI signed its deal with AMD, because it wants AMD to be a viable competitor to NVIDIA. This is why Google spends so much money creating its own TPUs and is kind of very clearly trying to work out whether it's better to sell access to its chips, which are otherwise a strong strategic benefit, to weaken NVIDIA's power in the market, or board them and be the only viable competitor to NVIDIA in creating top-level training chips. All of this is still very much in flux.
Yeah.
And we've not even mentioned the geopolitical and strategic dynamics of effectively all of these chips being made in Taiwan by TSMC, a company that has a stranglehold on the best chip making facilities in the world, and TSMC relying on ASML, a Dutch company that basically creates the only machines you can use to make the machines that make chips. There are players here, any one of whom could turn out to be kind of the strategic nut that just accrues all the value, or could just disappear overnight if a viable competitor arrives.
Well, those might be stories for another day here on the Tech Report. But thank you so much for joining us today, Alex.
Thank you for having me, Fergus. It's been good to chat.